welcome. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, Neeraj. And after yesterday's euphoria, it's difficult to actually, give a direction to the market right now, because at one side you are anticipating, these gains to stay ahead of the actual result of the election, and on the other hand, you're probably thinking whether or not there could be some profit taking.
Yeah, maybe the optimist will tell you that the direction is positive. Maybe there are a couple of hiccups or some profit booking measures before the actual verdict comes in, because let's face it, people who entered into this trade on Thursday and Friday are sitting on truckloads of profits right now.
But the interesting part is also that while your benchmark indices are sitting at record highs, the broader market space is still short by around 12 to 13%. So you've got the Nifty mid-cap index, which is still short of its record high by about 12% So the gap there and the possibility of the mid-caps to play catch-up is slightly bigger. The potential is slightly bigger post the election verdict coming out in line with the exit polls.
Yeah, which a lot of people alluded to as well. Maybe it's the time for the mid-caps to do so.
Yeah, let's see how it goes about in the next few days to come. But let's tell you what's happening in the derivative space. Agam Vakil is standing by with an F&O setup from yesterday. Agam, good morning.
Good morning, Devina. And obviously on unexpected lines, a lot of cues have changed substantially after yesterday's day of trade. And now we're seeing an extension of what we saw on Friday, and that is more longs building into the system. It's only that the quantity of longs were much more. Another 7% added in open interest for the Nifty. The Bank Nifty future seeing as much as 20% added, 22% to be precise. So there certainly is a lot of strength in the markets right now, with the VIX coming off substantially too, ending the day with losses of around 15%. And this is an indication that markets are now expecting things to remain steady. At least in the near term, in the next 3 or 4 sessions, we aren't expecting too much of a problem. Now, this is, of course, your May 23rd expiry, and it is going to be a very crucial one, an important one, considering we will have the election outcomes on that day. And we're looking at 12,000, which will provide that resistance in the near term. So it seems like the way positions have panned out, we're not likely to see 12,000 breach, but you never know. If we do see a very sharp up move, that level could move on to around 12,200 or something like that. Of course, the May 30th expiry, again, it is the 12,000 mark, which remains sacrosanct at this point in time. But moving on to your put-call ratio, surprisingly, it's come off to a certain extent, despite the fact that the markets have moved higher, which also indicates that there is more space for markets to move upwards. But moving on to stocks, Jet Airways remains in ban, but Reliance Capital joins Jet Airways in the F&O ban, among other stocks. We're watching out for United Breweries, very weak operational numbers. We're likely to see some pressure. We're going to have to wait and watch on that one. But Tata Chemicals, Chennai Petro, and HDFC Bank, among others, which is looking at longs. And in unwinding, we're keeping an eye on something like a Bank of India, CIET, and Kaveri Seed Company. All of them seeing about a short covering, and of course, Adani Enterprises moving up 27%, short covering seen there as well. So a lot of these counters will be in focus as we move into trade today as well.
All right, Agam, thanks very much for that. That is some of the stocks that you can keep an eye out on. But one more stock to watch out for on the back of results is Hpcl. It has surpassed estimates in the March quarter, aided by strong marketing margins and inventory gains. To know more about the factors at play in the quarter gone by, Bhanvi Arora had a chat with the chairman and MD, Mr. Mukesh Kumar Surana. Listen in.
So we had good throughputs, high marketing volumes, good operational efficiencies. We were also helped by some inventory gains and favorable exchange rates, which has led to good profits in the last quarter. If we see the overall in the year also, we had done reasonably well, where we were helped by higher refinery throughputs, lower specific energy consumptions, highest ever marketing volumes, again the logistic efficiencies and inventory gains. But on the exchange rate variation, we had a loss there. The negative factors were because of the higher average crude price. We had a higher fuel and loss component as far as price is concerned, and the lower cracks which were there. Most of the products except HSD had lower cracks. So sum total, but we could do well.
So revenues for this quarter are down at 5.8%. What is the reason?
That will be guided by the pricing of the products actually.
So what is the subsidy dues from the government?
So it will be around 6,000 crore as of now,
Okay.
which we had around 8,000 crore as of 31st March.
So what is your outlook on refining and marketing margin for FY20?
So marketing margin, of course, get guided by various factors. Where refinery margins are concerned, the MS cracks are improving. Diesel cracks had been in reasonable range. It is not as high as it was once upon a time, but it is definitely better than what it has been as far as MS cracks are concerned. So we see a slightly better GRMs, but MS cracks are likely to be into $5 to $7 range, diesel $12 to $14 range. So we should see around slight better than what we have, but not substantially higher than what we have.
So Maruti Suzuki has said that it will stop selling diesel-powered vehicles from April 2020 because the cost to meet new emission rules will widen their price difference. What is the current demand for diesel right now? And how will this decision impact your demand?
No, the demand has grown around 3% in the last year. And while the passenger vehicle segment, there has been a slow reduction in the number of passenger diesel-driven passenger vehicle compared to what it used to be in the overall mix. That is basically because of the narrowing differential between petrol and diesel prices. As far as the commercial sector is concerned, that had been diesel dominated as far as your trailers, trucks, and the agri equipment, construction equipment, cranes, trailers, or even DG sets, etc. They had been run on the diesel. Now, based on the economic growth, this sector grows. So you may see the demand on the commercial sector, though there may be a downside on the passenger sector. So it will be early to say that will decisively impact the diesel demand or something. I still expect that it will be 3 to 3.5% next year.
Okay. So how do you see crude prices moving with the Iran sanctions and the geopolitical situation in the Middle East?
So there are concerns on both demand side and supply side, which is putting the crude prices in bit uncharted territory right now. On the demand side, you have got concerns of US-China trade talk. On the supply side, you have got concerns about OPEC production cut, Middle East tensions, Venezuela issue, some issues with the Libya as well. So it's factoring in both the things, while it is neither allowing it to spike up nor it is allowing it to go down as well. And for some time we need to watch that how it plays out on both the sides. There may be speculation also in this depending on the news items which come. I still see it should move in $70 to $75, subject to some spikes here and there, but let's see, there is a bit of a unpredictable territory.
So what are the dues from Jet Airways?
We don't have any overdues from Jet Airways.
Okay, but what was the share of your business to Jet Airways earlier?
No, that varies, but as of today, we got no overdues from Jet.
All right, that was the management at Hpcl talking about the quarter gone by. Marketing margins have been substantially higher this time around, and that has contributed to the good set of numbers that you're seeing for Hpcl. Even the BPCL doing equally well. In fact, talking about BPCL, let's get across to our research team. They're standing by with us. Somit is actually going to highlight the quarter gone by for BPCL for us. Darshan's going to take us through some more stocks and news and what to watch out for as we open up for trade this morning. But Darshan, I'll start off with you actually. So for some stocks and news to watch.
Yeah, so let's start with some of the results. HEG came out with numbers which were disappointing. If you're looking at the top line actually grew 4% on a YOY basis, but there was a decline as far as the profits and margins are concerned. Profit was down 17%, EBITDA down 17%, and margins at 59% versus 74%, given the fact that raw material costs have gone almost double for the company, and the spreads for the graphite electrodes has come down significantly. Lakshmi Machine Works, a weak set of numbers. Revenues down 22%, profit down 40%, EBITDA down 50%. So margins at 5.5% versus 9%. So that's extremely weak. Torrent Pharma, weak set of numbers. Even though revenues were up 8%, EBITDA up 30%, and margins at 25%, the company reported a loss this time around. No doubt there was an exceptional around two things that made up the exceptional. Some of recall cost and one of the write-off as far as Biopharm was concerned. But nevertheless, coming in below estimates. US was weak, India business was weak. So overall, expect Torrent to react negatively. Jindal Stainless, if you're looking at the Dhampur Sugar Mills was the other one. Strong set of numbers, revenues down 3%, but operationally did well. Net profit at 108 crores versus the net loss last time around. EBITDA is up 15 times for the company and margins at 20%, so that is good. Arani Green Energy, the promoters are looking to sell almost 8.7 crore shares via an OFS. The pricing is at par, there's no discount, so that could be in focus. And Panacea Biotech will be in focus. They got the US FDA nod for one of the key chemotherapy injections, and that probably will do well for the company.
Okay. BPCL, Sumit, in line with what HPCL delivered in terms of the marketing gains?
Well, the numbers were pretty much ahead of the analyst estimates, but then pretty much in line with the other two oil marketing companies. Now, if you see on a standalone basis compared to last quarter, BPCL's revenue were down by nearly 6.5%, but its EBITDA and net profit jumped nearly 6 times compared to last quarter. Margins expanded to close to 6.5%. On the operation side, if you see the gross refining margin, that came in at around $2.74 per barrel. The crude throughput and sales both were higher by about 9% to close to 8.21 million metric tons and 11.65 million metric tons. So what aided the fourth quarter? Well, it was the inventory gains and the foreign exchange gains that aided the quarter. Now, in the fourth quarter, the company reported an inventory gain of close to 356 crore rupees as against an inventory loss of more than 3,300 crore rupees in the last quarter. So that is what aided mainly in the fourth quarter numbers. Along with that, the company also reported a foreign exchange gain of close to 275 crore rupees. Now, other than this, it was the higher other income which also aided the companies, and higher volumes that also aided the fourth quarter numbers. Now, other income was up by nearly 14% to close to 1,057 crore rupees, while volumes were higher by nearly 9%, as I pointed out earlier. However, some of these positives were offset by higher employee costs and a higher tax rate in the fourth quarter. Now, employee cost was up by nearly 29%, while the tax rate for this quarter was nearly 32%, as against 16% in the last quarter. Lastly, on the balance sheet side, if you see the company's debt, that was also higher by nearly 25% to close to 29,000 crore rupees. Now, this must be because of the capital expenditure plans and because of the dues that are pending from the government related to subsidy. Lastly, something to cheer for the shareholder was a dividend that the company announced of 8 rupees per share, which results into a dividend yield of close to 2% for BPCL.
All right, Sumit, thanks very much for that. Tech Mahindra reports numbers. Agam, what are we factoring in?
Well, not the best set of numbers expected, because there is going to be some amount of seasonality, because of which we're only expecting 1.6% uptick in dollar revenues, 1% uptick expected in rupee revenues. We're likely to see a contraction in EBIT margins, and because of that, an over 2% decline in profitability quarter on quarter. We are keeping an eye on total contract value, which could be anywhere between $200–300 million, and that is something that will provide the bulk of your growth. We're also expecting an uptick in the communications vertical. It's one of its biggest verticals, but we could see some sort of challenges when it comes to enterprises. Again, we're watching out for the 5G capital expenditure laid out from its clients, and the revenues that may be realized by the company on account of that, and of course also the capital allocation policy as we move into the new financial year. But on the whole, we're expecting a very quiet quarter.
All right, guys, thanks a lot for that. So watch out for all of those stocks as we open up for trade this morning. But I want to quickly bring in our technical experts, Rahul Randeria and Gaurav Bissa. Both of them are joining in right now. Gaurav Bissa, I'll come to you first. We're just about 28 points shy from making those record life highs. We closed at, we had a record high closing yesterday session for both the Nifty as well as the Sensex. But the question is, what kind of trade can you take at this point? Gaurav, can you hear me?
Yes, I can hear you.
Yeah, I wanted to know what kind of a trade will you take when you're just 28 points shy of a new record high on the index?
Good morning. If you look at the data yesterday also, we have seen good amount of covering happening in the call option side. Yes, 11,850, 860 is the immediate hurdle. Once that is sustained, once that is crossed, and one can expect another 60–70 points upside coming in. There are many heavyweight names that are given breakout. Banking space, banking index, bank Nifty has given a decent breakout. So there's a chance that we may see some more upside. But yes, it always it's prudent to buy above levels of 11,860, keep a 60 point stop loss on the upside. 11,950 is what I would be looking at. there's still a lot of people who have not been able to participate. Yesterday we saw a strong gap of opening coming in, and people just waiting that if there's a 50-70 points dip, we would be buying, and it just resulted in further and further upside. It is very rare where you see a 200 point kind of up move, and the index benchmark index is closing at the high point of the day. So I think there's a lot of strength that is happening, but for now I think buy 20 points higher, and one can play for another 70-80 points.
Rahul, Randeria, what about you?
Yeah, good morning, Devina. If you look at the previous top, which Nifty made at around 11,850, in 16 days it sharply fall down to the levels of 11,108. Now that downfall was just recovered in 4 days, so it is a classical example of a faster retracement. Now it has formed a valley, and in a very short span of time, Nifty has shooted up and covered almost more than 98% of the downfall. Now looking at this pattern, I feel that if the 750 point breakout, see the valley, if it add on to the lifetime high, which is maybe almost 11,850, the target comes around 12,500. So definitely looking at the major event, I feel that volatility would be there, and I feel that in short to medium term we could see the target of 12,500 coming maybe in the end of the month on the back of the result. Now one cannot go naked buy long on the index, as we have seen a very sharp volatility. So definitely I have a trading strategy in Nifty where one can hedge it by buying puts. So the overall call is buy Nifty in the range of 11,828 and on corrections to 11,550. Why this 300 point downside? Because we have seen high volatility. There are chances that we could see some sort of consolidation in maybe 1 or 2 days, and we could maybe some sort of profit booking could be seen. So that dip should be used as a buying opportunity. Upside short-term positional target 12,500, and downside should be hedged with buying 10,300 put of 30th May expiry.
Sorry, 11,300 or 10,000?
Sorry, yeah, 11,300. 11,300 put, which is quoting around 78 rupees. Same thing in Bank Nifty. We have seen almost 1,300 to 1,400 point rally in the last 3 to 4 trading sessions. Again, the momentum is strong, and we have a similar call in Bank Nifty also. So one can accumulate Bank Nifty in the range of 30,759, and on corrections to 30,300, one can buy in small parts. Upside positional target 31,900, which is almost 1,100 point from the current levels.
Okay.
And one should hedge that position by buying a 29,500 put of 30th May, which is quoting around 380.
Okay. Well, couple of interesting strategies. Rahul Randeria is bullish, but not going headlong into those bull positions, taking some protection down below as well. So that's on the index. What about specific stocks? Gaurav, Bissa, if I can come to you first, your top stock ideas for the day today.
The first I have a buy and sell recommendation. Among the buy recommendation, the first would be on something like a Chennai Petro, where we have seen decent amount of short covering coming in. It has witnessed a strong correction from levels of 240. It has found bullish harmonic pattern at 210 odd levels. It can jump towards a level of 222, 225 on the future side. One can buy, have a stop loss of 210, and for next 2 days, I am expecting 4-5% jump coming in the name. Second recommendation would be on Oro Pharma. We have seen consistent short positions getting built. It has been trading in a range of 690 to 800, probably 810 for last 3 months, and now we have seen a breakdown sort of coming in with decent volumes. Good amount of shorts were seen getting built on the breakdown part. I would recommend on any jump towards 670, the futures can be sold. Keep a stop of 680 on the downside. 650 would be the immediate target. With the kind of breakdown that we have seen, it can even slip much lower. If Nifty sees some vulnerability, some correction, then there's a chance that it may augment towards level of 620 as well.
Mm-hmm. All right. SGX is already 26 odd points higher this morning, and we need 28 points to make a new life high. So, in all likelihood, I mean, if we are to replicate SGX's performance, we would be seeing a new record life high being taken out in early morning trade. But leaving that aside, let's talk about individual stocks as well, because there is more potential in stocks too. Rahul, let's start off with you.
Yeah, I have 4 positional calls. First is a buy in Kotak Bank. yesterday we have seen their stock has broken out its lifetime high and it is trading at its unchartable territory. So definitely the momentum has built up and we could see a rally coming in the stock in the coming days. So definitely swing traders can accumulate the stock in the range of 1502 and on corrections to 1475. Upside positional target is 1600 with a stop loss of 1445. My second buy call is in Bharti Airtel. The stock is on the verge of a breakout of a very long consolidation and we could see a very sharp rally in the coming days. So definitely one can buy Bharti Airtel in the range of 340 and on corrections to 330. Upside positional target 375 with a stop loss of 317. My third call is buy in TCS. We have seen a hammer formation with a very long shadow in the deep oversold territory on the hourly charts. So we could see a short covering in the coming days. So one can accumulate in the range of 2147 and on corrections to 2110 with an upside target of 2240 with a stop loss of 2076. And my final call is buy in BPCL. Yesterday we have seen a shoot up in the stock after 3 days of small move. So definitely the momentum would be coming on the positive side. Some sort of dips could be seen that should be used as a buying opportunity. Hence one can accumulate in the range of 391 to 380. Short-term positional target 430 with a stop loss of 368.
On to our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Good morning, Neeraj. So we are tracking BEML on the charts and the ADX indicator that is suggesting a buy signal on the counter. But before we go ahead, let's first try and understand what the ADX indicator is. It is basically used to determine the strength in the underlying trend of a stock move. It measures the relative highs, it measures the previous day's high to its relative highs and lows over the current trading session. How do you interpret it? You go long when the positive DMI line crosses above the minus DMI line, with the ADX indicator to being supportive and an indicator of the underlying strength being a value in excess of 25, which suggests that there is a strength in the momentum. It could be either on the higher side or on the lower side. In the case of BML, as we could see, the lower line over here, the green one, that is the plus DMI line, and the red one is the minus DMI line. That has given a positive crossover, and the white line, that is the ADX line, that is at the mark of 40, which indicates that there is strength in the trend. So with the positive crossover happening, the MACD2 on the daily charts giving a positive crossover, a big move in yesterday's day of trade, closing higher by more than 9%, which is its highest gain on a closing basis since August 2017. The stock looks set for another leg of move on the upside.
How well has this worked in the past, Yash?
So Devina, 2 out of the last 4 times that this has managed to happen, the stock on an average has run up more than 11% over the next 1 month period.
Got that. Thanks a lot for that, Yash. Siddhartha Khemka of Motilal Oswal Securities is also joining us on the show right now. Siddhartha, thanks very much for taking out the time on such short notice. But it was quite a euphoric day yesterday. We are going to be seeing more earnings coming in today. Tech Mahindra reports its numbers. You've got Tata Motors that reported numbers pretty much in line with what the street was expecting. How do you expect these stocks to perform now? And in particular, I want to talk about Tata Motors and what do you see going forward from here?
Yeah, Devna, good morning. Good morning, everyone. So we saw a euphoric day in the market, among the best days in the past few years, mainly led by expectation of a stable government formation at the center. If the real outcome on 23rd mirrors or matches to the exit polls, I think then the market could remain at these levels given the overhang that was there on the market of a hung parliament or a third front government, which at least the exit polls have allayed the fears of such kind of a scenario. So given that the index has moved up to its record highs, valuations at current levels don't look comfortable given that the consensus expectation is about 25% earnings growth in Nifty, and on that we are trading currently at about 19-20 times, which is higher than the normal average about 17.5. So that doesn't leave much upside from an index level. And what happens once the government is formed, the focus of the market will come back to the fundamentals, where we have seen that the earnings downgrade cycles has continued throughout FY19. We are at the last quarter of FY19, and we are seeing that for FY20 there could be some pressure in terms of the earnings downgrade that could continue. Apart from that, if you see the focus also would be on the other major macro developments in terms of the global development that has been happening, the US China talks which keeps on going on, the Brexit, and then coming back to the domestic factors such as the liquidity squeeze that we are seeing in the debt market, the monsoon and how it progresses. So overall that leaves little room for at least on the Nifty. If you see some of the sectors that we feel should do well from here, given the expectation of the NDA coming back, private banks which are anyways doing better, corporate banks which are seeing a revival in the asset quality and growth in the core business, that should continue to do well. A sector that we believe that should be back in focus is capital goods, which has been languishing for quite some time. We see that private capex cycle should see some recovery, and that should help some of the capital goods companies where valuations are still attractive.
Right.
Cement is another space which we believe should do well, given the expectation that the NDA government has had a focus on infrastructure, and that should continue.
Sure.
So that's the overall picture that we are seeing right now.
Okay. Siddhartha, a quick rapid fire of sorts. Good morning to you, of course, and thanks so much for speaking to us today. Quick rapid fire, 2-3 stocks which are in news today on the back of results. Did you have a chance to look at the United Breweries numbers?
Yeah, so just glance through, the numbers have not been very good. We have seen this is a big EBITDA miss due to other expenses and lower gross margins. While the net sales have grown at about 11% of a strong base, EBITDA has declined about 18% and adjusted PAT is about down 25%. Volumes are likely to have grown in double digit. We will have the con call, and we'll understand the details on that. Some of the key details on the full year numbers, the volume growth has been about 13%. Most markets have witnessed strong growth, barring some segments like the West Bengal and Uttar Pradesh. And if you see on the overall full year basis, the net sales has been up by 15%, and the gross margins for full year at least looks good and improved about 40 basis points to 53%. So that's the result flash. Currently, we see that after this sharp run up in the stock, we have had downgraded the stock to neutral. We had a buy rating for quite some time, and we had advised our clients to switch from a UBL to a United Spirits, given the underperformance that United Spirits had and the improvement in financials that we are witnessing in United Spirits.
Okay. Do you track the sugar space, Siddhartha? The numbers from Dhampur Sugar were quite exemplary.
No, Neeraj, so we don't track sugar as of now.
Okay, just before I get back to Siddhartha with the next question, watch out for Dhampur Sugars. The numbers were quite strong, EBITDA moving up, EBITDA margins moving up quite substantially, even though the numbers were slightly below what some of the experts who were tracking this stock suggested. But just those reported numbers are so strong that it could well have a good interest in the session today. So do watch out for Dhampur Sugars. And while we're talking about all the positives, also important to highlight what could happen to some of the stocks which have some bit of negative news flow around them. One of them is Torrent Pharma, not news flow really, but the numbers slightly below estimates. Any chance that you looked at those numbers, Siddharth?
So Torrent Pharma?
Yes.
Unfortunately, I have not looked at those numbers.
Okay, those numbers too, Devina. I was speaking to Darshan before I came in. While the reported margins were strong, and you would see that optically the numbers look strong, 25.5 versus 21.3, but the expectations were over 27.5. So therefore, that stock too could react.
All right. The other one was Dr. Reddy's that took a thump in trade in yesterday's session. Obviously, the management commentary did not go down too well with investors. It was down closer to 6%, one of the largest losers in the index yesterday. So that Dr. Reddy's, is there more downside pressure according to you?
Yeah, Devina, so if you see the pharma sector has been quite peculiar. We have seen that while there had been earlier issues of regulatory compliance, there have been consistently being repeated, and some of these stocks, although numbers were improving, repeated issues with regards to compliance have had the sector under pressure. So coming to Dr. Reddy's, looks like given the current set of news flows, looks like the stock could be under pressure. Also having a view that pharma, if you see the overall space has been under pressure even in yesterday's market, where the overall market was in euphoria. There are two defensive sectors like pharma and IT which were grossly underperforming. So that's the space that one should continue to remain cautious as of now.
All right, we've just got about 53 seconds left to go for the market pre-open. I just want to take a quick glance at what's been happening to the SGX Nifty. I think it's given up its gains. It was up closer to about 26 odd points just a few minutes ago, and now it's just about flattened out in trade. 11,868. Remember, we are 28 odd points shy from a new record life high on the indices, for the Nifty at least. So we'll see how the day shapes up and how the morning shapes up as we open up at 9:15. But they're going to be awaiting the pre-open ticks on a few other stocks as well. Tata Motors, and what it does post its quarterly performance that came in line with expectations. And you have BPCL on the index that you're going to be watching out for post the numbers from IOC and Hpcl. All of them pretty much done similar in tandem, but they've beaten street expectations this time around. Marketing margins have really worked in the favor of most of these oil marketing companies. That's SGX Nifty for you, and the pre-open ticks up on your screens right about now. Sensex is opening with gains of about 1/3%. Nifty up about 55 points. That's 11,850. It's fluctuating a lot. You'll have to wait for these numbers to settle in before we can really take a call on which direction it's heading towards. But let's take a look at the individual stock movers. By the looks of this, pre-open ticks at least new highs there, closing in on that 11,900 mark. Stocks, individual stocks, Adani Ports, that's up about 3.7%. Remember, the Adani Group stocks, they were in focus in yesterday's session. Adani Enterprise was up, I think, 27% or so. And the rest of the pack as well, which is Adani Ports, then you had Adani Green Energy, all of these, Adani Gas, all of them were up and about. Adani Green Energy is open 12% yet again today. Adani Power is open 10% higher as well. Asian Paints on the index is up about 2.5%. BPCL on the back of its numbers is up 2%, should pull up an Hpcl as well. A slight outperformance compared to the others, and therefore you've got that difference in terms of the pop that the stock is seeing. 5.5% for an Hpcl. Vedanta Power Grid, HCL Tech, and the rest of the pack doing as usual. Amongst the losers, Tata Motors on the back of its numbers is down about 2%. Reliance Industries gives up some at 1,300. Sun Pharma looks weak, about 0.75% given up. Currency, not too much of a move in today's session.
Pre-open rates suggest that we might start in or around those highs. So let's wait and watch what happens there. 11,857. So that would mean that we would start off at new record highs. But let's wait and watch. Let's give these rates a chance to settle down 8 minutes and then come to those. The currency and the bond yields, maybe Devina has already marked them, but just want to bring them up again because yesterday, remember, was a remarkable pullback for the rupee. But 69.74, a bit lower than what was the case yesterday on open. The bond yields were at 7.29 on open, by the way, 7.28, so just about there. No big changes in the bond yields in the session today. But a lot of stocks, other stocks to monitor and figure out what could happen. From a trade perspective, Rahul, Randeria, any of the Adani Group stocks that you find merit in going long or short today?
Yeah, if you look at the whole of a sector, means whole of a group, where the stock has rallied more than 15% in almost of the stocks. So definitely I will be going out for Adani Ports, where the stock has formed a high wave candle supported with very strong volumes of the recent past. So definitely we could see momentum building up in the stock. We could see some sort of pullback or some sort of cool off because yesterday we have seen a sharp rally. So definitely one can accumulate the stock around 400 to 390. Upside positional target would be around 425, and one should place a just stop loss below 385.
Okay. Well, it was interesting that how the Adani Group behaved in the session yesterday. It was
it was probably something that you would have foreseen if you were talking about a majority Modi government.
Yeah, but 28% moves was quite stellar. The other group, though, which did reasonably well, and Gaurav Bissa's views on that would be interesting, were the PSU names. Dredging Corporation, MMTC, ITI, 16% higher, some big moves there in those stocks. Gaurav, Bissa, you look at charts very closely too. Any of these stocks wherein you believe the rally is a bit overdone and you would take profits off if you were invested there? They're not in FNOs, you can't go short on them, I guess.
Agree, and something like a dredging corp, it's just about trading near all the major moving averages, whether 289 or 55 DMA for that matter. So this is a decent time to book profits and switch to some other stocks. But there are certain PSU names that are looking interesting. If you talk about banking space, then Union Bank is one that has found a bullish harmony, A B equals CD pattern. If it manages to hold on levels of 72, it gave a close around 74 yesterday. It can head towards 80, 81 kind of levels. So with the 2 rupee stop loss, one can buy for 70 rupee kind of target. Concord is one that is also looking quite interesting. Any dip, 70, 10 rupee dip can be lucrative. Keep a stop loss of 470, 472 on the upside. 515, 520 is what I would be looking at. So there are selective names among the PSU basket where we are seeing some buying interest emerging in. It might not be a secondary where everything is moving up aggressively in next few days, but selectively these names have bounced back from a crucial support area and are forming good technical patterns. So I think one can stick with these names. And some of the names that you mentioned, ITI and Dredging Corp, I think it's time to book profits.
All right. Siddhartha, Khemka, yesterday's session saw a big pop for PSU banks. The index itself, the Nifty PSU Banking Index, was up 7.5%, was the best performing sectoral index. Is it the turn of the tide for PSU banks? Would you start investing in them? Siddharth, can you hear me?
Yeah. Can you repeat the question?
I was asking you about PSU banks. Do you think that there's some more interest coming about in this particular pocket after yesterday's big move in all of the PSU banking names?
Yeah, so given the expectation of a stable government coming back, we expect that the market is actually very positive on the entire PSU space as the discussion was going on by Neeraj. So there, apart from PSU banks, there are a whole host of other PSUs where generally we don't see much of an interest, and this is a time where these stocks come up, and it's a good, I believe it's a good time to look at portfolios and exit some of these stocks which generally are not doing well on a fundamental basis. Coming to PSU banks, our view is that some of the larger corporate facing banks like the likes of SBI, BOB, they should continue to do well given that bulk of the provisioning has been done with. We have started seeing a lot of resolution from the NCLT. So that should help. We have a positive view on both SBI as well as BOB. Coming to the smaller names, while they do see some interest, we have seen the results not yet picking up. We believe that in a longer run, they would find it difficult to compete in the event that while some of these private banks have now pulled up the shocks, they are now becoming more competitive, the likes of ICICI, SBI, Axis, IndusInd. And the challenge in terms of capital adequacy, which would continue to impact some of these names, for the example, the smaller ones like Union Bank, which reported a very weak numbers. So that's a space for investors should clearly be cautious. There could be trading opportunities on back of news flows. However, on a longer term basis, stick to the larger quality names, the likes of SBI and BOB.
Okay. Well, the pre-open rate's about to settle down, and from the looks of it, the pre-open rate suggests that we will be starting at record highs. So, well, we spoke about this likely to happen yesterday. It didn't happen yesterday quite there, but today, pre-open session suggests that we'll start off at that 11,863 as the pre-open rates are about to settle down. So we'll start off immediately at new highs. Question is, can we hold on to them?
Yeah, interestingly, almost about 11 to 12 Nifty 50 stocks are trading at their 52-week highs already. I mean, last time that we hit a record high was, I think, 18th of April. And at that time, not so many index stocks managed to pull through along with the index. It was just the top heavyweights that took the index where it did and made those record highs. So I think you had a single-digit number, closer to 1 or 2 or 3 stocks that probably would have hit 52-week highs at that point. But it looks like a lot of moving parts coming together, broader market pitching in, and a few more stocks within the index itself propelling the rally this time.
Yeah, so all of those factors. And maybe, just maybe, if indeed there are, from a market perspective, no accidents on Thursday, then you could well have this move lasting for a bit. At least that's what the expectation seems to be. Siddhartha, in light of all of this, what's the best mid-cap stock to buy? What is the top recommendation that you are making at Motilal Oswal currently? Because almost everybody seems to be believing that it might be a time to log on to mid-caps and small caps.
Yeah, so if you see some of the mid-cap names that we are recommending in this current market, starting with again the financials which has the highest weightage and higher mind share. So we like RBL Bank, we like Federal Bank in the banking space. We like LIC Housing Finance given the valuation that they're trading at and the asset quality that they have, and this just slightly improvement in the business for there. Apart from that, some of the other names that we like is Indian Hotels in the hospitality space that we have spoken of, and one stock in particular that I can recommend today is Siemens that we upgraded post the quarterly numbers, and that's a space, as I was talking, that capital goods could do well in the current event of things. So if you see overall the numbers for the quarter were very good. The overall revenue growth for the next 2 years, we are expecting about 17% growth driven by basically the products business, where they have seen help the company to mitigate the slowdown in the industrial capex cycle. So the focus of the company has moved from the traditional business to the products and services business. Margin expansion has been a key driver of the earnings. The stock current valuation provides comfort, and given these factors, we believe this is one of the good plays to look at the overall capex cycle recovery. We have a buy rating with a target price of 1290, giving a decent upside from current levels.
Okay, we're just minutes away from market opening, and let's tell you all that you need to know to stay ahead in trade today. First up, muted sales in India add to JLR worries for Tata Motors. Net profit nearly halved but surpassed analyst expectations. BPCL's net profit surged to its highest in almost 2 years, aided by higher inventory gains. Cross-currency tailwinds are likely to aid Tech Mahindra's fourth quarter earnings. The company will report earnings later today. And United Breweries reports an operationally weak quarter owing to higher costs and lower sales in some regions. Promoters of Adani Green Energy plan to sell 5.59% stake via offer for sale. Nearly 8.75 crore shares may be sold at a floor price of 43 rupees per share. And Panacea Biotech's formulation facility in Himachal Pradesh has received US FDA approval to make an injective used in chemotherapy. The stock is up about 6.5%. We're about 3.5 minutes left to go for market open. Pre-open rates have settled and they indicate an open at a record high. 11,863 is where the pre-open rates have settled. Just want to quickly get in a sense from both our technical experts on individual stocks that we're going to watch out for. Not your top call, but probably this entire month we're going to see the expiry on the 23rd, the weekly expiry happen, and that's going to be an important one. For that, what is the sector that you're going to be focusing on, plus the stock that you've seen interesting trends in?
Yeah, in the recent times, last couple of days, we have seen the metal stocks has been hammered down very significantly. So looking at the yesterday's pattern, I'm bullish on Tata Steel, where one can buy on in the range of 483 to 470. Upside positional target would be 515, and one should place a stop loss below 465.
All right, Tata Steel from Rahul Randeria. Z is the other one.
Which was down in yesterday.
Yeah, that probably didn't manage to see the kind of lift that the rest of the stocks have done, but it's already done that in the recent past.
Yeah, but 363, slightly patchy moves for Z Entertainment. Devina, I think the bigger question would be at 11,863 or 11,864 after hitting new highs. What's the trade on the index? Because this is not just yesterday's move. We've had a move on Thursday and Friday, which has continued yesterday, and we are likely to start off positively today. Gaurav, Bissa, would you believe that at some point of time later today or tomorrow, there could be a mild bout of profit booking that will come in, or is it difficult to preempt that right now?
One cannot rule out let us also think that you just mentioned that on around 18th April or so, we saw a fresh high being made. But after that, we saw a decent amount of correction also coming in. So we are expected to make a fresh high. It's not just 11,863, but we can see another 72 points. But there is a possibility that we may see some amount of profit booking ahead of the actual results. There can be some anticipation, whether apprehension, whether BJP or one party will be getting a majority of seats or not. So on that front, there can be some profit booking that cannot be ruled out. Decent amount of OI concentration, 12,000 call option that can also act as a strong hindrance, and we have seen a 800 point up move coming in last 2 days. Some amount of profit booking cannot be ruled out, but for now, as long as we are above 11,860, it can move by another 780 points. One can deploy a ratio call spread strategy, buy 11,900 call and sell two 12,100 call option or 12,200 call options for that matter. That can be a decent strategy as well.
Okay, quick top calls then from both our technical experts as well. Siddhartha, we'll come back to you for an opening thought, but Rahul, let's start off with you first.
Yeah, I have a buy call in Ashok Leyland. Yesterday we have seen a stock has broken out from last couple of days of consolidation. So definitely positionally one can buy in the range of 87 to 84, which is a gap area. Upside potential is around 96 in short to medium term, and one should place a stop loss just below 81 rupees.
Gaurav, Bissa, your top call?
It would be Chennai Petro. It's bouncing from crucial support area. It has not moved that much as well, and there's a good scope. It can see a positional movement as well. So for me, that would be the one can keep a stop loss of 210 and be long in the name.
Okay, we'll look at record highs on open in all probability. Gentlemen, stay on. We'll just take in opening thoughts from you post-market open. But this promises to be an exciting day. In about a month's time, or slightly more than that, we've recaptured new highs, and this time around with more gusto. The question mark only is, can we sustain that? At 11,863, look at these numbers, guys. For the Nifty 50, we've hit new highs. It's a big day, and it's very interesting. It's happened in a matter of 3 or 4 sessions that all the negativity has gone past. But Nifty is at record highs. Now slipping from there, but nevertheless, on open, we have nudged record highs, and that's a big thing. Nifty Bank, anyways, had hit record highs on a closing basis yesterday itself, and 30837. This has been the principal propellant. So good start. Not bad. The Asian markets were a bit mixed. We haven't started off on a bad footing, slipping from those levels, but still have nudged new highs in the session. What about the mid caps and the small caps? They had a big day of trade yesterday. Let's see if that continues in the session today. No, flattish for the mid cap space, very flat for the small cap space as well. Maybe a bit better, but very, very flat for the mid cap space. We've just come off quite rapidly for the benchmark indices as well. Bring up the heat map and see what's moving and what's not. Keep an eye out here. The Nifty 50, after nudging new highs, is almost back to 11,845. So a bit of a pullback. Let's wait and watch. Typically it happens, hits a point of resistance and then pulls back and then tends to revert back again. Let's wait and watch what happens in the first 15 minutes. What about specific stocks? Even Stevens, Adani Port still remains one of the principal gainers. HDFC, which had gained 6% yesterday, up in the green today as well. Otherwise, we don't have big gainers. What about losers? Tata Motors on results reacts negatively after a dismal third quarter. Comes out with a patchy fourth quarter too. No wonder the investors are a bit disappointed. BPCL posts the numbers, and the numbers were very good, but the stock a bit lower. Headwinds from crude also remain there, and IT by and large has looked wobbly, and Infosys and TCS in today's session too looking slightly weak. I think IT, if it stays under a bit of cloud, it's got fairly decent weightage on the index, and therefore that could just pull the index lower. But by and large, the start isn't bad. HDFC, the principal gainer in the session today from a weightage perspective, up about 1.5%. Very quickly, a couple of pockets I want to highlight at the broader end of the spectrum as well. Stocks which are trading at close to new highs and how they have done in the session today. So should come up. Just Dial, Shree Cement, SRF, interestingly, none of them, after closing at fresh highs yesterday, are starting off on a big note, just about a sedate move. What about result reactions? A couple which haven't come out with good numbers. Let's see what they are doing in the session today. Well, United Breweries not reacting too much, but look at Torrent Pharma, 5.5 or 6% lower. Margins missing estimates, even though they were higher than the previous quarter, and it's showing in the way the stock is reacting 6% now and counting. But Devina, the index is back to record highs, 11,864 currently.
Oh, and it's made 11,865.7 now is the new high. As we keep moving forward, we'll actually see this number on an intraday basis. You'll actually see smaller triggers and new highs, if at all the momentum takes it that way. So I think now 65 1.35 odd is the new life record high for the index at this point. So we'll keep an eye out on that. But individually, from the broader market space, quickly run through some of the big moves that have come in. We've spoken about the Adani Group stocks, and the flavor continues. Edelweiss continues to move higher, now at 177. This stock too has been thrashed in the recent past, posted its quarterly numbers. You saw a drop, and now you've seen it pick up from those lows. Some value buying coming in at lower levels. You've got the likes of a Z-Learn, another 3.5% gain. So SL Group stocks in focus. Within the sugar space, remember we were talking about good numbers. Dhampur Sugar posted. Bajaj Hindustan is also doing relatively well, about 3.5% for a Bajaj Hindustan. Hathway is up about 3% You've got Jubilant Life up about 3%. Info Edge 2.5% higher. And Diwan Housing Finance, the housing finance pocket, was extremely active in yesterday's session. Diwan Housing itself was up closer to about 7.5% today. Another 2.5% higher for a Diwan Housing Finance. Dilip Buildcon is up 5%. You've got Lakshmi Vilas Bank 4% higher. Should pull up a Bandhan Bank as well. This stock was extremely active, closer to 8% yesterday, and in today's session is up about 1%. And the entire PSU banking lot, you've got the likes of a Bank of India, a Syndicate Bank, a Bank of Baroda, Punjab National Bank. All of these stocks helped the nifty PSU banking index move up 7.5% yesterday. Today's session, the quantum of gains is not as much, but you've still got them opening in the green. So all in all, about 836 stocks have opened in the green versus 364 stocks opening in the red this morning. But it continues to make new highs for the index, 11,877 now.
Robust moves, 11,877. Rahul Randeria, quick thoughts. Nifty Bank. Any of those stocks, any of those indices, would you initiate a small intraday trading long today?
Yeah, that would be high risk trade. Both the indices should be traded with specifically if you talk about Nifty, one can buy at current levels with a strict stop loss of 11,810. Upside target would be 11,950 for intraday trade. Bank Nifty again, one can buy at current levels with a strict stop loss below 30,720. On the upside, target would be around 31,200 almost for intraday.
Okay, but Gaurav, Bissa, very quickly, from the financials, HDFC Bank, Bajaj Finance or Kotak Bank, one of these three, which is the better buy from a trade perspective?
I think it's going to be Kotak. The momentum has been quite strong. It has been more cleaner one without too many whipsaws. So I think this is one name that can be on the radar and can go towards 1535, 1540 is what I would be looking at. Bajaj Finance is one that should be added on dips. But at these levels, this one is not that favorable. But Kotak can be bought at these levels.
All right, gentlemen, we leave it at that. Rahul and Gaurav, appreciate you taking out the time. Hiren Way, the Alchemy Capital, is joining us on the phone line right now. It's a big day for the Indian equities. Yesterday's big euphoria of about 3.5% translates into another 0.5% in today's session. Hiren, what would the call be? Is most of it baked in, or there is more headroom left, according to you?
Well, I think at least in the near term, a big part of the move is probably almost happened. What has not yet moved is the broader markets, and I think that potentially may move up very smartly if the final results on 23rd are in line with what the exit polls are saying. That is when the confidence to, buy into the small and mid caps will really come and the broader markets will start to perform. So I think right now it is still very much led index heavyweight and by financials, but the rest of the market might join after the results are out and if they are in line with the exit polls.
This is actually, what history has also suggested. In an election year, you actually see the benchmark index outdo the broader market mid-cap space, and post the verdict coming out, the rest of the calendar year is when the mid-cap index smartly outperforms the large-cap index, and you've got much of the money coming back into the broader market space. But, for investors at this point, we're talking about record highs, and while we're talking about much of the rally already factoring in the outcome, what kind of investment advice do you suggest at this point, Hiren?
See, I think given the big move that has already happened, it is better to now play scene rather than, kind of play blind, which is, you look at the results and I think clearly it was just one event. I think people should just invest the way they were investing earlier, which is if they believe that, they find significant value, you should buy irrespective. But having said that, I think now that we are so close to the results, I think people should look at the results, and I think there will be enough opportunity that the markets will give over the next few months, because there are some unresolved issues that whichever the new government is will have to solve. The NBFC crisis is yet to be resolved. There are still issues of, leverage, overhang of a lot of promoter groups that needs to be resolved. And only once the NBFC...
Oops, did we lose Hiren? Hiren, are you there with
back
us?
in the system.
Okay. And I think that's such an important point being made by Hiren. I hope people are listening into this. Hiren, good morning, Neeraj, and thanks for taking this call. Just wondering, so within your portfolio management services firm as well, are you waiting or your next investment decision, would it be backed by tailwinds of policy that you perceive the new government could pursue, or are you squarely putting your eggs in the basket which is showing earnings growth? How are you approaching fresh large investments, or how would you do that?
Well, I think all along, we don't create portfolios, based on elections or otherwise. But obviously, a large part of our existing investments were in companies, where we see very clear visibility of growth. And there were some bets that we made in anticipation of, growth coming back. So I think if we do see a very rapid response to manage some of the issues on the NBFC side, etc., then I think the slowdown that we saw in autos, etc., can be reversed very quickly. So one would have to wait and watch and see what the policy response of the new government is. And as I said, there are a lot of opportunities in the mid and small cap space, where stocks haven't moved as much as they have moved in the large cap. So I think there will be opportunities to place our incremental bets in that area.
Okay. Hiren, we take a moment to thank you for joining in today and giving us your quick perspective. Really appreciate your time.
Thank you.
That's an important market voice, Hiren Ved of Alchemy Capital. Get in, another important market voice, Rahul Singh, Chief Investment Officer for Equities at Tata Mutual Fund, joins us right now on the show. Rahul, it's been a while, but good having you. Thanks much for taking the time out, and congratulations on your new role. I would seek advice from you on that front itself. How would you be approaching your investment or investing your clients' money in light of the fact that we've had a stupendous up move, not just yesterday, but over a 4-day period, anticipating this election verdict?
Yes, hi, good morning. I think our philosophy, our investment philosophy, which in general terms is called growth at reasonable price, but what I would like to segment it into is two parts. One is we look at value, but we look at value with triggers. And secondly, we look at catalysts for earnings upside or earnings surprises vis-a-vis consensus. So really, I mean, nothing really changes from that perspective. I think one big realization we've had over the last 5 years of having this strong mandate at the center is that there are parts of the economy which do well or don't do well irrespective of having a very strong government at the center. And let me give you examples. I mean, we have seen last 3.5, 4 years of this 5-year tenure of the last government that the banking sector NPA problem took 3 to 4 years of that 5 years to get resolved, and it's only in the last 6 months or 1 year that we are seeing some activity on that front. Similarly, on the private capex side, we are seeing some green shoots 4 years after we had a strong government. So obviously there are certain things in the economy, there are certain cycles in the economy which have taken much longer despite having a strong government, and that should be a good sobering thought for anyone who wants to jump in and buy at this stage. Having said that, I think some of the segments which I mentioned, like green shoots in private capex, corporate banks, we continue to like, and we continue to like not for the reason that we will have a strong government at the center, but for the reasons which I just mentioned, which is that things seem to be turning around, and there is a potential for earnings surprises in these couple of sectors. And I think that's what we look for, and nothing changes to that extent. Having said that, what obviously changes from a fund flow perspective, if we have a good result on May 23rd, is that obviously there is a feel good and the fund flow kind of picks up, so which kind of makes things challenging for us to generate outperformance or to start finding or to keep finding stocks at reasonable value. But that's part of investing, and I don't think that is going to change as long as we have easy liquidity conditions across the world.
Okay, Rahul, let's try and dissect this. The heaviest space, which is financials, has chalk and cheese behavior. The expensive ones have gotten even more expensive now, especially post the up moves that we've seen. I mean, you don't normally see the HDFCs, etc., move up 6-7%, but combined market cap of the HDFC twins over 10 lakh crores, Bajaj Finance knocking at new highs, 9.5 times, 10 times price to book. We have those valuations right up there. Growth at reasonable price would entail that you don't look at those names. Somehow, those are the ones which are moving up. How do you approach investing in financials? Because that's the biggest bucket right now in terms of weightage.
Well, you're right. I think the second factor which I mentioned, which is the fund flow and the kind of allocations to India, which tend to go up on events like these, are what are driving the frontliners, as you can see for yourself. Yesterday, there very little difference between the increase in the Nifty and Sensex and the small cap and mid cap indices. So you can clearly see that the tide of the wave will first hit the large caps, and then it will go to the mid and small caps, and that's one way to look at it. That's the technical part of it. But as I said, we are focusing more on even within financials, there are sectors or there are pockets of financials which are much more reasonably priced, where there are tailwinds in terms of some of the older housing finance companies, for example. They are benefiting from what's happening to the new generation HFCs, corporate banks I mentioned. So there are pockets where you can be overweight within the financials and not necessarily chase some of the names which I mentioned, which are also having visible growth. So look, it is not for no reason that these banks are doing well and the stocks are doing well, because what's happening in the NBFC space is also resulting in some kind of a market share gain or a market share comeback for some of these banks, which was not the case over the last 2 to 3 years, when NBFCs could grow very rapidly because of easy liquidity conditions over the last 2 to 3 years. So banks are making a comeback, not only from an NPL stress point of view, but also from a market share point of view in the retail segment, where NBFCs were making a huge dent. So I think it's a combination of the two, and that's why you are seeing some of the banks which you mentioned, which are perceived as retail banks, also doing well because of the way the dynamics have changed between NBFCs and banks.
What is the biggest threat to this current up move that we've seen? Obviously, the biggest threat in the most immediate term is a reversal of the results that we saw in the exit poll. But keeping that aside, if it's status quo in terms of the election day results, what is the other biggest threat that you envisage for this rally to come to a halt?
Well, as the previous guest was also mentioning, I think there are some pending issues on the NBFC liquidity squeeze. I think we need to see how the new government comes to terms with solving that liquidity crisis, because it should not turn into a solvency crisis, and that's where this rally could have some issues if the liquidity crisis becomes a solvency crisis. The second is on the budget. I think because we have seen slowdown, consumption slowdown over the last 3 to 4 months after the last budget was presented. So we need to see how the fiscal deficit pans out when the full budget is presented, whether the 3.4% number fiscal deficit sticks or does it slip. Because a lot of assumptions on the tax collections, etc., would have been contingent on economic growth assumptions and consumption growth assumptions, which have definitely taken a downward tick. And that's really something to watch out for. And once the dust settles down after elections, I think the focus will very quickly shift to these two issues, in my view.
Okay, Rahul, we'll leave it at that. Thank you so much for taking the time out and speaking to us today. And once again, congratulations and all the best in the new role.
Thank you.
That's Rahul Singh of Tata Mutual Fund talking about his thoughts on the markets and the way ahead. Well, sticking to big voices with the exit poll suggesting the favorable outcome for Narendra Modi's government, foreign investors have turned their focus back on India. Sean Taylor of DWS says that while he will not add onto his positions in India, it remains the best long-term investment story. He was speaking on Bloomberg Daybreak Americas. Listen in.
I wouldn't add to it. We've already been positioned for the election. It's been quite a turbulent year for politics in India. It started off looking like Modi wouldn't get in, really because he had quite a nationalist agenda. But then after the sort of terrorist issues with Pakistan, he became much more popular. And here we are with him looking like he's going to get more votes than we thought. Let's see what actually happens in the next couple of days when because sometimes the polls can be slightly misleading. But it's good news for India, and it's good news for the economy going forward.
So is it too much to say there's some parallels between Mr. Modi on the one hand and Scott Morrison down Australia on the other, sort of a social conservative, but somebody who really embraces economic liberalization and really pro-growth? Mr. Modi came in originally office sponsoring that, having done that in Gujarat. He didn't get it done. Can he get it done this time?
I think actually he did a lot more than the market. He did a lot more than the population probably realises, and I think the market's given it the benefit for the doubt. Particularly the goods and services tax has added maybe 1% onto GDP. The problem is when Modi came in, the market had already rallied. A little bit like now, we've had a very good rally, so we probably paused for a while, but it's a good, safe investment. And we always say it's the best long-term investment in Asia.
When you talk about the populace versus the markets, one of the issues in India, as I understand it, is jobs. They need a lot of job creation. What can Mr. Modi do consistent with what is good for the markets and creating jobs?
In my opinion, he's laid down the foundation of an investment cycle, but he needs finance and the banks to be really strong and sorted out. So the public banks are in a pretty bad state. They need to be reformed. They need capital, and that capital then can be lent, and then we can get the economy going at a lower level.
Can we talk about how India versus Brazil, and that you get the reformists coming in, everyone's super excited, Bolsonaro, that rally will last a year, and then it's like, show me what you got. I mean, is there something we learn from that?
I think India is much more stable, Alex, because you've got the Indian local mutual funds that keep a good floor on the market. Actually, if you look at the development of flows over the last couple of years, they've really been taking money out of property and out of fixed income and putting it into equities, and that's made it more stable.
Well, that's interesting. DWS also saying that India is the best bet, but maybe they don't want to add on to positions, and that's interesting from an FI view.
Yeah, and it's similar to what Jonathan Garner said yesterday when they were pitting India against Brazil and these two markets. Though obviously for him, Japan still stands to be the number one bet at this point.
Well, we need to slip into a break. Lots of market conversations already, a couple of corporate conversations. On the other side, we decode March quarter earnings with Baba Kalyani of Bharat Forge and Hiranand Savlani of Astral Poly. Stay tuned to Bloomberg Live.